my wife and I, as we have been looking to sell off our non-biblical responsible stocks and purchasing biblical responsible stocks from the buy list, we're going to be making some pretty significant moves. Our portfolio is about $2 million, and what we have in there currently is about one-third non-biblical. So we're going to be selling a lot here in the future. And as we look at reinvesting, two questions really. Again, I know that you've talked about the percentages for each sector being between 1 and 2.5%. So for our portfolio, that would mean like per position, that would be about $20,000 to $50,000 per position. Is that good? Having that high of a percentage or cash amount per position?
Yeah, I think it is. And that's why whenever we're talking about asset allocation, we use percentages rather than dollar amounts, because we know there's people listening out there that maybe have a $5,000 portfolio, and some people might have a $5 million portfolio. So we go in percentages. If you get less than 1% in a position, you start to get into dilution. So, there is a such thing as over diversification. And I think that's where we end up a lot of times when we just use mutual funds, because people think, well, I need 10 different mutual funds. Well, if you own 10 different mutual funds, then you probably are going to own somewhere in the neighborhood of, at least 500 or more stocks. So when it does limit volatility on the downside, you're not going to go down as much, but you're not going to receive much benefit from the upside in those positions as well. So somewhere when you're doing individual securities, you need to have somewhere between 30 to 50 positions, I think is a good number.
For the overall portfolio?
Yes.
Okay. And then my second question is, as we're, beginning to, sell off and buy new stocks, and I think I heard this on an answer from last week, but, as we're waiting for new stocks to come on the buy list, is it okay to then take the biblical responsible stocks that we have purchased from before and to begin to build those allocations up as we are underweighted in those sectors and in those positions?
Yeah, I would first and foremost buy from the buy list. Don't get in a hurry. We're adding things all the time. And so, you should be able to fill out those subsectors. And, that really kind of forces you to dollar cost average and do that. In addition to that, I would say that if any of these are in non-qualified accounts, then if you have any giving that you're going to do this year, maybe you consider a strategy of gifting off some of those shares that have appreciated in cost. So that could help you avoid some of the capital gains that might be associated with that. And then you could just replace that in your portfolio with cash.